if you're finding it hard to be profitable, then I've got 5 habits for you that can hopefully help you to become at least a little bit profitable, if not profitable. So what are these habits? I'm just going to be mentioning them so that maybe you'll find 1 or 2 things which you are lacking or which you are ignoring but can actually be helpful for you. I've been trading for 5 years, and right now I know some of the things that cause me, so like that are helping me to become at least a little bit profitable, right? So I just wanted to share them with you so that maybe you find something that can be helpful for you also, right? So first of all is like having a trading plan, right? So having a trading plan or so like a trading system. If you have a trading plan, you know that I'm supposed to enter this setup, only this, maybe these 2 setups. If the market does this, right, I'm going to be doing this. I will react this way. You have everything planned out from the beginning. If I have $50 in my account, I'm using 20 cents lot size for boom and crash, and this is what I'm just going to be using for every $50 account. So if it's a $100 account, I'm going to be using 40 cents lot size, right? So everything should be predetermined. If there's a reversal, I'm just going to be doing this. If I'm in a trade and it's in profit, right, I adjust my stop loss to go below profit. Everything should plan each and everything beforehand. So like you have a guide, so a plan of what you're supposed to do every time, so that you don't have stress of what you're supposed to do. Which lot size should I use? Am I supposed to be entering right now? Everything is predetermined, and if anything doesn't fall in plan, you simply just ignore it, right? If there's no setup, there's no setup. If your criteria for entry hasn't been met, then that's it. You should have a set of rules for yourself that you should follow at all times. That's going to be helping you become profitable. The second thing that I want to talk about is emotional detachment. You should be emotionally detached from the trades that you take. So how can you do this? By applying what I just said in the first point, right? So to be emotionally detached, you have to you have a plan. You know what you're supposed to do whenever you're supposed to do it. If there's a drawdown of this much IX, the next thing that you just have to do is follow exactly what you had planned. It's to have to be firm and acknowledge that you were wrong or something like that. Just exit the trade if it's no longer working out. Be confident, be firm, and stick to what you set for yourself, for the rules that you set for yourself, because you know what you're supposed to do and what you are not supposed to do. And emotional stability is backed by ability, not hope, right? So what do I mean? Emotional stability is backed by ability, not hope, right? If you know that I'm able to trade, you know that I know the setup, I know what this happens, I know that this and this happens. You shouldn't I hope that this trade works out. I hope that it doesn't hit my stop loss. You should know that if you are able, you know what happens. You know that at this point my stop loss, my setup is invalidated. So you set your stop loss there, and you won't question where your stop loss is. But if you are you have hope, you don't know, you don't have confidence in your strategy, right? You're just going to be hoping that I just hope that my stop loss isn't hit over there. I just hope, let me just increase my stop loss so that it doesn't get hit, right? So emotional stability is also backed by ability. So you should always practice until you get you are used to the markets, until you know your strategy, so that you know that at this point my setup is invalidated. There's no point in me holding this losing trade. There's no point in me holding this trade if this and this happens. So you have something that's breaking you, so that you don't force trades, you don't do all that, because you are able, you have the skills to do what you are confirm what you are doing. Then the third thing that you have to do is you have to watch more than you participate. Right? So most of the times, if you find yourself always finding an entry, then most of the times there's something that's wrong. If you're set up, if you're you should have an edge in the market, right? You should have an edge such that you know that I only enter when this and this and this happens, when all these criteria have been met. That's when I'm more profitable. That's when I have a greater win rate strategy. That's where I have a greater edge, right? So you should be able to watch more than you participate. You're just watching, analyzing, and waiting for when your setup has been made, when your entry criteria has been made, rather than when you're always finding a trade in each and every opportunity, each and every 30 minutes you have got a setup, you have got an entry. You should watch more rather than you are participating. Because if you are always entering, at the end of the day you've entered 20 trades. Of all those 20 trades, I'm sure that at least 10, right, you might lose. And if your risk reward ratio is, then obviously you are going to be in drawdown, you're going to be in loss, because you have lost more, rather than if you have got only a few setups that you enter, if you've got only like a few entries a day, maybe you have 5 entries a day, maybe that's why. If you are in intraday trading, depends on the type of trader you are again, right? Even if you lose 3 with a good risk reward ratio, it's still profitable. At least you have there are more chances of you winning, right, rather than forcing trades. Because if you're finding entry all the time, it means either you fear of missing out, you're forcing trades, and eventually it won't end well. That's so like guaranteed, right? So this is a game of consistency. So you should have a certain set of criteria that has to be met for you to enter a trade, right? So just keep up with that and focus on only what works for you. The fourth thing that I want to talk about is applying risk management. Risk to reward ratio is like the topic about risk to reward ratio, right? So as for me, right, it depends from person to person, the account size and everything, right? As for me, I risk, for every trade usually I risk 10% to 15% usually, right? Although it might be less or slightly more, but usually it's 10%. If it's more, 15% or slightly more, because usually I trade against spikes, so I have limited control, but at least it falls within range. It falls within that range, right? So like I try to accommodate that gap of uncertainty, right? So what you are supposed to so like analyze is, see that if I'm using a risk reward ratio of this much, how am I going to, so like at the end of the day, if I lose, how many trades does it take for me to blow this whole account? So like how many lives do I have if I'm using this reward ratio? If I'm entering this way, how many lives do I have? How many chances of trading do I have? So you should always think of it this way. If you have $100 account, I'm actually risking $10, because I want to take at least 10 trades, right? And of course I can be risking this is because I can be risking 1% of $100. That's risking $1 per trade. That's unfathomable. I can't imagine doing that, right? So that's why I risk 10%, right? And 10% is so like almost similar to what people on prop firms do, because if you are trading a $10,000 account, right, and you are risking 1% of 10,000, right, is $100. And come to think of it, if you lose $1,000 total on that account, if the account is retrieved, is taken away from you. So in reality, you are risking $100 on that $1,000 that you have, like, imagine. So it's actually just that you are risking 10%. So it's almost one and the same thing as if you are risking 10% reward. So always apply risk reward ratio, right? And how are you supposed to apply this risk reward ratio, right? So before you even enter the trade, right, you want to enter your buy over yield, right? And your setup gets invalidated over yield, right? This is where your setup gets invalidated, right? So after you've determined entry point and where your setup gets invalidated, then this is when you are supposed to calculate the number of pips between this, right? And this determines the lot size that you are supposed to be using, because I believe that the stop loss, so like the amount that you are risking, should be fixed. If you are risking $10, then that's it. It should just remain $10, right? So what changes is the lot size, right? Not the risk reward ratio. Most people just say that the risk reward ratio is 1:3, but what is the one that you are risking? Is it $25, right? Is it fixed, right? Because on one trade it's a 1:3, but on this trade you are risking $25, right, to gain $75. On another trade you are risking $50 to gain $150. On another trade you are risking $10 to gain $30, right? So as for me, I believe that you should have the risk should be fixed on an amount, right? Then you change the lot size depending on the gap between your entry and where your stop is going to be, right? So that's how I apply risk risk reward ratio. That's my concept. And if anything else works for you, then feel free to help me in the comment section down below. Then the fifth and last thing that I'm going to be talking about is journaling your trades, right? So journaling your trades actually helps you because let's say you've journaled your trades for that you've taken this week, Monday to Friday, right? Saturday usually maybe you don't trade, depends from person to person again, right? If you're trading currencies, it's more obvious. This weekends you don't trade, right? So when you are checking for your next up for this, your setups for the next week, right? You should also be reviewing previous week. How did you perform? Which mistakes did you make? What did you do correct? What should you double down on and focus more on? Which mistakes did you make? Everything, right? And find a way of countering those. Find a way of making yourself better each and every week, each and every day, right? So having a journal helps you keep track of what you're doing wrong, what you're supposed to adjust, and all that, right? So at the end of the day, you are going to aid yourself, help yourself become better by each and every week, every month, every year, and you eventually going to become profitable, right? So yeah, that's it. That's what I think. Those like habits that I want you to try out and see if they're going to be helpful for you, right? So remember, you're the bridge between where you are and where you want to be. So do the hard work, especially when you don't feel like it.